I'm Charlotte McLeod with the Investing News Network, and here today with me is James Henry Anderson, Senior Market Analyst at SD Bullion. Thank you so much for joining me online today. It's great to see you.
Charlotte, it's great to see you. It's always difficult because you stare at your face on screen, but I know where the camera is, so I'm now looking right down the barrel. So thanks for having me back on, and I'm looking forward to our conversation.
Really nice to be catching up with you again. It has been a while since we last spoke. And one of the reasons I wanted to have you on again right now is because we've got gold and silver prices at these elevated levels, and I'm really curious to know what's going on with physical demand. Obviously, at SD Bullion, you're right on the front lines seeing who's buying and how much they're buying. So if we could start there, and if you could tell me what you're seeing there.
Right. So last month, March 2023, with all the bank issues that were happening, that was the highest volume sales for virtually any bullion dealer that's doing an honest, forthright job in terms of high volume bullion sales. Okay, so not merely our company, but any of the top 5 to 10 retailers that you talk to would say similar. And I'm not talking about just barely squeaking. I'm talking doubling all-time record numbers. It was absolutely crazy, and the amount of orders that we had in terms of notional orders was ginormous, so large that and difficult thing in this industry to be ready for that, because it comes out of nowhere. All of a sudden, it's like, oh, you got to double your staff tomorrow. Good luck. So what you see right now in the industry is a whole bunch of temporary policies that are trying to restrict and slow down the notional amounts of orders that are happening, because every order processing, whether it be 1 ounce or 500 ounces, takes a certain amount of time, because you're talking about a whole new SKU, a whole new item that you got to put in the parcels and to do it correctly and make sure they're done safely and soundly. So in order to do a slowdown of our notional order volumes, we had to implement a temporary policy just a few weeks ago of a $500 minimum threshold. This week, we lowered that down to $250 an ounce, or $250 minimum. And there was some blowback, and it's understandable. There's a lot of people who can only afford a few ounces of silver here or there. And so on the internet, I saw a lot of people complaining and feeling like we were disloyal and this and that. It's a business decision. They have to understand that, yeah, we knew that we were going to repeal a bunch of them and make them feel as if we weren't loyal to them. But the bottom line is we had so many orders that we had to get out the door and do that. We had to slow down order volumes. And so that was in the same time, hiring and training and getting new staff, because, we're moving up to the new level in this bullion bull market. And so that's basically what's been going on. This month, I was just looking at the numbers. They're still very, very high, and that's what, we're 2/3 of the way through the month, and the numbers are very good notionally in terms of order volume, the amount of fiat currency running through the system. Not the orders, though, because of our temporary policy. We slimmed down on the order volumes. We'll basically be less than half of what last month was, and that's helpful for us to get back to what's reasonable, which is 1 to 3 business days after your funds clear, we get it out the door and you get the tracking information. That's what our customers have come to grown to expect, and we want to do that moving forward. But sometimes we just get overwhelmed with the amount of demand, and that's essentially what happened this last month. That in the industry-wide, not merely at our company, but industry-wide.
Wow, really interesting. And that ties into another question that I wanted to ask you, which was for buyers. How hard is it to get their hands on physical gold and silver right now? It sounds like it is getting a little bit tricky. I wondered if you could also speak a little bit about the premiums that people will see if they want to go out and buy physical gold and silver right now.
Yeah, so it's going to depend. There's some people who only will shop locally, depending if you live in a big enough city, you may have a few local options. And, I've just been hearing rumor or various comments saying they go into local stores and they're basically cleared out. A lot of times the inventory is just not there, and when inventory is there, is prices, pretty high, pretty not too close to spot. So that's a similar phenomenon that's happening in the bullion market at the moment. It's not as tight as it once was. It got really ridiculous just about a year or two ago, but it's getting there. It's starting to trend toward that level, and you just get another terrible in terms of banking issues that come up. If we have another few months like that, you'll be right back to where we once were in terms of a dislocation between spot and the inventory pricing of bullion products that are available and ready to be delivered. And long since I've been on this SD Bullion channel, and I've managed the YouTube channel, and every week I do a weekly update for bullion interested viewers. I've constantly pounded the table that ultimately, before this thing's all said and done, there's going to come a time where bullion will just essentially go disappear, and the only options you're going to be left with in terms of getting some type of allocation or some type of exposure to these spot prices, you're going to have to go to underperforming derivatives, unsecured derivatives, things that will not perform as well as bullion, and things that are not as safe as bullion. But you good luck with risky mining shares and unsecured ETFs and see how they perform in that scenario. But I know bullion at some point is going to be priced worse and higher versus spot than it's ever been before on a percentage basis. That's ultimately where I think it goes.
So with all of that in mind, I think we have people who are already invested in gold and silver who want to pick up more. With prices very high, we tend to start seeing interest from more generalist investors as well, who think that now is maybe the time they should get in. I think that this may cause people to maybe make mistakes when they're buying. They just want to get their hands on anything they can. So what common mistakes do you see, and what would you want people to avoid during times like this when they want to be buying?
Right. So first and foremost, go in slowly. Don't take, like, if I had 20% of my net worth, right, and I was looking to allocate it to bullion, as ChatGPT recently suggested to people, and as back-tested fiat currency era data kind of explains, that having an exposure to gold bullion especially has been pretty shrewd in terms of the last 53 years of performance. Well, if I was simply going to take a fifth of my liquid net worth and move it into bullion, I wouldn't do it all in one move. I'd do it in multiple tranches, right? And I would take my time. I'd probably do it in 5 tranches, say, over a half year's time, roughly. That would be something that you'd be probably prudent, because, nothing goes straight up a wall, and there's price dips, etc. So ultimately, you want to be able to kind of ease your way into it, but also not buying such small volumes that you're paying huge exorbitant premiums, right? So you need to kind of weigh all those varying things, as well the different product choices that you have at the moment, versus where their premiums are, different products versus where spot is. Okay, so there are very, very good products that are still reasonably priced, closer to spot than, say, American Gold Eagles or American Silver Eagles, right? Or 90% silver, for instance. I mean, 90% silver and American Silver Eagles are literally trading like collectibles now. I mean, it's gotten so crazy in terms of their dislocation to spot, and just the way the market has been treating them in terms of price discovery and bid and ask spreads. So if I were someone looking to have a Silver Eagle or a Gold Eagle, sure, buy one or two, but I wouldn't go head hog into either of those at this moment. Right? If I were going to be getting an allocation in bullion, I'd be looking at other like-kind bullion products that are almost as good in terms of recognition, and in terms of bid-ask spreads, they'd be a lot slimmer. So I would look at some of the better silver sovereign coins out there, like silver Krugerrand coins, for instance, or the Royal Mint makes some really nice ones. The Britannia silver coins, the Perk Mint makes a lot of very good products, and their premiums are much more reasonable in terms of the sovereign coin market. On the bullion bar side, I would look at hallmarks that are respected, that are well known, that are hopefully LBMA approved, because it just adds a little bit of panache to the hallmark, and your ability when you go to sell it to demand a higher premium than some hallmark that just nobody knows. So you got to kind of think in terms of, not only am I buying this, but maybe someday I or my kids will sell it, and I would like to have something that demands respect when I go to sell it. And that's essentially what you have to think through in terms of course, some people may think, I'm going to buy this and die with it, great, but your kids are going to probably end up selling it at some point. So you better think that through for now.
Okay, I think that's really helpful. And talking a bit more about prices. So we are seeing these high levels of buying right now, with gold pretty close to its all-time high. Of course, we do, I think, have other people who are waiting, thinking maybe it's going to go back down and that will be a better opportunity to buy. So I'm curious to know what you think is coming for the gold price as we move forward in 2023.
So right now, gold spot has been hovering, closing a lot above 2,000. In terms of the fiat US dollar price. But that is only the fiat US dollar price, right? And you need to look in terms of gold it's not a simple, the US economy, I mean, think of the population. It's 1/20th roughly of the entire world. The GDP, I don't know, you'd have to do the numbers, but it's not even 23 trillion versus the global GDP. I mean, we're talking like 20% of the world, right? So if you break out in terms of what's going on in the world in terms of their fiat currency gold prices versus the fiat US dollar gold price, if you break it out versus one another in a GDP breakout, gold's already broken out above long-term resistance, and now that breakout is going to become support. And so essentially the same is going to happen for the fiat US dollar. I mean, the fiat US dollar has been strong in the last 7, 8 years. It's been relatively strong versus other fiat currencies. But ultimately, we're going to head into a secular bear market for the fiat US dollar, and that's going to last for a decade plus. And that will be when gold goes mad, ultimately. Because the US dollar, as much as people want to disrespect the US dollar, it's still the dominant fiat currency in the world, and it still pretty much runs the way pricing goes. So when I look at the fiat US dollar price of 2,000 and we keep trading and settling above it, well, that tells me that 2,000 used to be the resistance zone. 2,000 is going to become the support zone long term. So ultimately, I'm talking 5, 10 years from now, $2,000 an ounce gold is going to be looked at as $250 an ounce gold. It's going to be looked at as real value, not a bad play. But you have to have a long-term view. You don't buy at 2,000 and it goes down to 1,800 for some reason, and you all of a sudden think you made the wrong trade. No, you make this trade in physical form, in bullion form, with a 5 to 10 year purview out in distance in the future as to how long that trade's going to last and when you may reallocate some of that trade elsewhere.
So, as you've been outlining, there are so many different factors that are influencing gold right now. We've got the dollar, we've also got the Fed, interest rates, inflation, banking crisis going on. What do you think is the most important driver for gold right now?
In the short term, it's definitely the banks, the shaky banking, the brittle banking system. That's the one that overwhelms things. And the other thing as well, in the short, medium term, it's what's the fiat Fed going to do in terms of interest rate, and what's the fiat financial media going to tell you, and will beat you over the head with in terms of, what's going to hurt gold prices, what's going to help gold prices. They'll tell you this stuff all day to the blue in the face. Some of it's not true, but they don't care. And the bottom line, the longer term thing in terms of gold is that we're moving into a new structure, a new system. We have to. This system's breaking, it's failing. It's obvious if you look at all the trends. It's not happening tomorrow. It's not happening next year, but it's going to happen in the decade that plays out. I mean, I'm talking, we're 2023 now. You get me out to 2033, and it's going to be a different world. I mean, you think that the changes from the global financial crisis 2008 to say when the internet went crazy, when we were able to do Zoom calls and stuff a decade later, right? If you had told people that was going to be the case, they probably wouldn't have thought it was true. And the way it's changed lives, the way that people can live somewhere else and still work for a company and not have to go to the office. All those things are major changes that most people didn't see coming, but they came, and they've done a lot of difference in terms of the world, in terms of arbitrage and what people can do with their lives. Similar stuff is going to be changing in terms of the system. You're moving from a US dollar dominated system that more or less got that handed to it after the World War II Bretton Woods Agreement. We've been living on the petrodollar fuel for a while, but that's starting to change as well. We're moving toward a more multipolar world where different economies such as China and other major fast-moving economies in Southeast Asia want to have a say. They want to have some dominion and some opinion over what goes on in terms of trade. And you have the BIS consistently out there working on a new system, a new CBDC system. There's over 100 countries working on their own CBDCs, and the BIS is the back end of that, and they've been working on various systems for the settlement of sovereign trading between countries and between major commercial banks, essentially. They will be able to then trade in the future when this system goes online without having U.S. dollar as being the intermediary, not having the U.S. dollar dominated banking system we currently are using still. That's very brittle. They're not going to be using that in the future. So that's really bearish long-term U.S. dollar demand. You'll have, already, I think the MCBDC system, if you looked up, what's it called? Project, I'm going to forget the name of it. But anyways, I did a 2 or 3 weeks ago, I did a video and showed a 4-minute clip on what they did. You're talking about 5 major central banks in the Asian economy who worked on this program and this test. And you could tell, obviously, the BIS is ready to scale this thing up. And you're talking about 50 to 100 of the largest GDPs in the world are probably going to be on a system that can within the next 5 to 10 years. And so what's that going to do? That's major secularly bearish for US dollar demand long term. And so that's the point. This is just starting. The idea that gold at 2000 is like some high crazy price, the people are nuts. You know, if you think that's high, you don't know, you're gold illiterate. You don't understand what game we're playing.
Yeah, I think you're highlighting a lot of really important topics right now. And I want to go a little bit deeper into CBDCs and de-dollarization. You have an interesting video up on your YouTube channel as well about de-dollarization, kind of looking at why are we hearing about it so much more right now. I think that definitely on our channel, people hear about these concepts and maybe they don't know exactly how it will affect them as individuals. So is there anything that you can say about that? How is this going to affect people in their daily lives?
I will answer that question in 1 second, Charlotte, but it came to me. The name of that video is Project Enbridge. It's a 4-minute video on BIS's YouTube channel. Anyone can look that up. And that's the back end. That's the settlement underneath of the retail CBDC, which we're going to get into right here. I'm probably going to highlight this video coming up. It's called Project Icebreaker. It's about BIS retail CBDC project, and that's, you know, the other side of the mirror in terms of what's coming. The BIS retail CBDC project Icebreaker, something you can look up as well on YouTube. It's a 3 to 4 minute video, and it kind of explains how retail CBDCs are going to allow people to function in the future in terms of trade and settlement and even an international retail settlement. So for instance, say I bought something on eBay in Mexico and it was shipped to me and I wanted to pay the seller. You could theoretically use the coming CBDC system to just pay this person directly and have no intermediary, which, you know, is kind of nice because you cut intermediaries out, you're going to cut a lot of fees out, which is always good. But the problem with this system is, well, who are you trusting to be the intermediary, right? I mean, ultimately, I'm not sitting here banging the desk cheering for it. It's not something I'm like, oh, this is exciting. I'm looking forward to this, the CBDC future. I'm just telling you what it is. You know, I'm basically planning on what's coming and just preparing people because you don't really have a say in the matter, okay? These people who are in charge of central banks, they're still in charge. And I don't care how much people think that their cryptocurrencies and all this other stuff is going to interlope things. It's not. These people are still in charge. They still have a monopoly on violence. They still have like 1/5 of the entire amount of gold in the world. They still have the monopoly on laws. They still have the monopoly on the announcements that you hear in mainstream financial press. They still have the monopoly on various on and off ramps. I mean, they're still in charge, no matter what anyone thinks. They've interloped and taken a lot of the cryptocurrency infrastructure in order to build this company system. So, yeah, what do you think is going to happen? When this comes on, they're going to squeeze the high hell out of crypto and try and make it look terrible so people can turn to them and say, well, I trust the central banks more than I trust these yahoos over here who've been running frauds for who knows how long. So, yeah, I mean, that's what's coming. I'm not cheering for it, but ultimately, if you're a retail person, it will come and likely get introduced under a crisis scenario, and it'll likely be handed out in some form of a monthly stipend for people who are losing their jobs because technology oncoming is going to be taking a lot of their jobs. A lot of the remedial work that people have done for decades and decades, which has been awful, terrible office jobs for the most part, is going away. And that's not the worst thing. I mean, basically, if you get a stipend per month, what you should do then is retrain, re-educate yourself, get hip to what's happening in the world, and try and get ahead of it. Try and not be caught dead in terms of being caught in the crossfire of what's coming, because it's not going to be enough to live a quality of life that's high, but it might be enough for you to have time and flexibility with the shavings. Hopefully you have some savings to retrain and repurpose your life. And I think that's ultimately where we're headed. And that this is not happening tomorrow, but it would not surprise me if we see retail CBDCs flourishing within 2 to 3 years.
Okay, that's really helpful because it is hard to get answers on what this scenario would actually look like. So thank you for that. And as we're heading toward this, you probably want to own gold and also silver. So let's make sure we talk about silver as well. We've seen it get over, I think as we speak right now, it's above 25. We saw it over $26 per ounce last week, but I know a lot of people are still looking for that $30 level. So silver's path forward in 2023 as well. What are you seeing there?
So, my prediction as to what it's going to do, that's hard for me to even to put yet. I could give you a range. I think this week we had the World Silver Survey come out, and the World Silver Survey is published by the Silver Institute, but who actually writes the report? It's Metals Focus. And who actually writes the reports? People who live right next to the city of London. So you have to keep that in mind as what their interest is. The city of London is being drained of silver. Their unsecured ETFs are a real problem. They have a real problem coming decades. So when you read that report, keep in mind the people who are writing that report are going to pour cold water on what they think silver will do, or at least they want to make the impression for anybody who's on the periphery who might join the silver buying that's going on in terms of record volumes. They want to make sure those people stay out. So what they suggested was, the fiat Fed is going to continue with rate hikes all the way through the end of the year. There'll be no rate cuts. And somehow silver spot's going to go back to where it averaged last year at 21. It could bottom at 18 at some point the second half of the year. Possible. I mean, if you get enough bank failures, maybe the spot goes to 18, but you can bet bullion's going to be in the 30s. So yeah, I would suggest that perhaps that might happen, but you have to think in terms of why, right? Why would that happen? The other thing is, if the fiat Fed starts cutting rates by the end of this year, that means you're in, recession. You're going to have gold start running away. And I don't expect the gold-silver ratio to just stay at 79 in that case. I would expect the gold-silver ratio to fall back toward the 60s. And so you'll have spot getting beyond 30 if that's the case. If you had rate cuts before the end of the year, that means we're in recession, and then there's some real problems. So, you have one of two ways things can go, and maybe it's probably going to be somewhere in the middle. That's usually how things are. So, I mean, this is like I said, a 5 to 10 year play, a 5 to 10 year thing, and it could be longer because you're moving into a world where everything's digitized. It always is nice to have some form of wealth that's private, that's completely outside the system, that gives you optionality. And ultimately, bullion gives you a lot of optionality, and that's why, I'm irresponsibly long in bullion. But for average people who aren't mired deep into this industry, it's proven. I mean, bullion in terms of prudent allocation to someone's net worth, roughly about 20% of your liquid net worth in bullion has been mathematically proven to be a pretty sound decision, especially when you are suffering under full fiat currency regimes.
Yeah, I think it's really key to keep that time horizon in mind. And last time we spoke was a couple of years ago during kind of the height of the silver squeeze. And it felt like at the time people were disappointed and maybe surprised that didn't have an immediate huge uplifting effect on the price. So maybe we can talk a little bit more about that. What is the status of the silver squeeze right now?
So the silver squeeze is larger than any one person. It's a movement that I feel echoes almost the history of the late 19th century with the free silver movement came about, more or less pushed by the liberal Democrats at the time because silver had been demonetized in the 1870s. And anyone who moved out west was a lot of times silver heavy in terms of how they're making their, a lot of miners, et cetera, and various folks out there who had a lot of debt in gold. And you demonetize silver, and then all of a sudden, how are you going to pay back that gold? It basically was a consolidation of the West by the big bankers in the East. And you had a huge situation in the United States where you basically had this battle at the end of going into the 20th century about whether or not silver was going to be remonetized or not. It wasn't, and they failed at that attempt. But I see a similar kind of feeling of people who are buying silver or doing the silver squeeze. It's a combination of, I see it as a great store of value. That's why I'm buying silver bullion in terms of value on the long-term scale. And then B, I see it as a way to option out of this entire system in some form, some fashion, and to have something that's private that I can hold. I mean, there's a whole litany of other reasons, but I'm not going to go into them all. But the silver squeeze movement is something larger than anything in terms of, it's not Reddit controlled, it's not any of that. It's basically a movement of people who have been doing this for decades, and other people who are new to this kind of came about from the early or Q1 2021 Reddit push. But ultimately, this thing goes until it gets squeezed. And that, I think, the silver squeeze ultimately leads to the gold squeeze, where you're going to see a run to gold bullion as well, and there just won't be any in terms of, reasonable prices, reasonable delivery times, et cetera, et cetera. So the two kind of work hand in hand. Silver is going to lead gold in that regard.
Yeah, right, as we usually hear that it does. Before we stop talking about silver, I want to go back just briefly to those Silver Institute numbers that you're talking about. So we got the latest World Silver Survey earlier this week, and you were mentioning that maybe you should take some of what they say with a grain of salt, right? But how do you feel about the demand numbers? So they are pointing to record demand for last year, deficit of about, I think, 240 million ounces. Do those feel correct to you? Do you have any other commentary that you would share?
Yeah, I think that they're pretty accurate in terms of those two numbers. When they started 2022, in the first month or so, I think they had a report, and our company founder, Tyler Wall, was mentioning this in an interview. He went back and looked at all. In early 2022, they claimed, yeah, the deficit will be negative 20 million ounces this year. And then, cut to 11 months later, it's full that number, right? So, their guesses are, it's like this. Which way is the wind blowing? It's whirly, it's swirly, it's swirly. Oh, wait a second. There's a 20 mile an hour, 30 mile an hour, 40, 50. That's a record gust. And that's basically what they dealt with there. So what are they saying now? They're saying, I think, 140 million ounce deficit this year. I think they'll be closer. It won't be 12x off. But, really how it's going to play out in terms of the deficit this year will be a question of, well, what happens with spot? What happens with the macroeconomy? What happens with India, who's been all but non-existent to begin this year because, they bought record volumes last year, over 300 million ounces, which is, first off, 300 million ounces for India is a record. A 240 million deficit is an all-time record. We've never seen numbers like that, okay? So India's swamped with silver right now. They're selling at a discount. But what occurs, if all of a sudden spot dips to 18, like Metals Focus claims it might? You know what's going to happen? India's going to buy a lot more, and they're going to come flying in because they see massive value. If it goes up, what are you going to get? You're going to get a FOMO trade. You're going to get a massive fear of missing out trade from the West, which is a huge amount of silver bullion buyers. I mean, the United States is one of the largest in terms of silver investment-grade bullion buyers in the world. India is right there, neck and neck, depending. India uses it more for jewelry. Westerners use it more of a store of value. So, what's going to happen, it's hard to say. They'll be closer, though, this time. They won't be 12x off, I don't think.
Okay. I appreciate that commentary for sure. So as we are wrapping up here, I want to ask if you are seeing anything in the gold and silver markets that people are missing. And, you watch closely all the time, so I'm sure there are things that come to mind.
Yeah, I probably could sit here and talk about some of that for hours. Let's see, off the top of my head, what are they missing? Well, you got to go back to like the attitude of people in 2021 when this, kind of ramped up and got higher in terms of the Q1 2021 silver squeeze kickoff, more or less. You got to remember the mentality of people then was bubble mentality. It was fiat financialized bubble mentality. And they were thinking, oh yeah, I could just make this trade, double my money tomorrow, yada, yada. And it's not the way it works in a break market. No, you're buying into a rigged, fiat financialized market that has real value, but it's going to take some time to play out to see that value run up a wall and see the truths of what, silver and gold should be worth in terms of their actual real value in an economy that slants more toward how hard it is to produce things, how hard energy is to make, how hard, you can't digitize everything. Well, you can, but you're going to need silver and gold to go inside of it, right? I mean, so these are all things that are going to come to play, but it's going to take some time. So this mentality of like, yeah, this is an easy trade. I'm going to double my money in like a year, no problem. Like, yeah, it's just like people came in a little bit too stupid because they were used to the cryptocurrency clown market that we went through and the tech bubble market that we saw. You're saying you're going to see secular bear markets in many things. You're going to see secular bear markets in the U.S. dollar, in stock market, in the bond market after they cut rates. There's going to be a horrible secular bear market in the bond market because, the bond market just ran through 4 decades of a bull market. What do you think happens after 4 decades of a bull market and you go into a bear market? It's going to last for decades. So you're talking about major asset classes. The real estate market, we're not even going to go into that. It's the clown show in terms of the real estate market. We've not even rectified or come to any type of truths of what's happening there yet. So there's a whole confluence of things, and bullion is one of those things that you can just buy and kind of put it out of here so it doesn't have much counterparty risk, and you can hold it for a long-term store of wealth. And I think ultimately 5, 10, 15 years from now, it's not only going to store wealth well, but it's going to do something that's only happens once in a while where all of a sudden the valuation of the two, silver and gold, just runs up a wall in relative comparison to goods, services, other asset classes. That's where we're headed. And so, that's basically the take. And anyone who thinks that this is like oh yeah, next year it'll be 50. Yeah, hold your horses. This is going to take a little bit longer than that. You're talking about the change of the entire global secular monetary system. I mean, the entire structure has to change. We have to go through a lot of not only interventions in the market that we're going to have to go through, but we're going to have to go through a lot of political differences, a lot of change in terms of technology and how that's going to change our world. Ultimately, silver and gold will do well through them all, but it's going to be volatile and crazy. So, buckle in.
Yeah, okay. I appreciate that realistic take. We're going to get there, but probably it doesn't happen instantaneously, which is hard for people to understand, but it's very true, I think. So thank you so much for coming on to go over what's going on in gold and silver with me. I think this was really good.
Charlotte, it was a pleasure. Always good. You always have great questions, and thanks for having me on.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is James Henry Anderson with SD Bullion.